Good evening, friends. Yesterday I was discussing about SIP, SWP, what is smart SIP, etc., and what are the points to be seen before investing in mutual fund. Today I am going to give you my recommendation in a diversified portfolio. Again, I am repeating, in a diversified portfolio in mutual fund under SIP category. But before I give my recommendation, there are certain important points to be seen. You should know before you invest what are the other things to be seen. In fact, the entire mutual fund investment, we can categorize it into large cap, mid cap and small cap, which I have already explained. Large cap means first 100 companies. Mid cap means 151, next 100 companies, from 151 to 250 companies. Then small cap, anything above 250 companies. Now these companies are classified based on market capitalization. So first 100 companies, large cap, 151 to 250 companies, small cap, then more than 250 companies, it is classified under small cap, mid cap and small cap. Now what is a diversified portfolio? In a diversified portfolio, you will have an investment in all these sectors, large cap, mid cap and small cap. This is the advantage in investing in diversified portfolio. Now, before you invest in any fund, there are other points also to be seen. Say for example, whenever you invest in a particular fund, you should know when the fund was started, who is the fund manager, what is their expense ratio, and what is their total asset under their management. All these points to be seen before you invest in a fund, because these are very crucial and very important points for taking a decision. Another thing before you invest in any portfolio is that there are so many parameters. That parameters also to be taken into consideration. Say for example, alpha. You should know what is the alpha of the fund. What is alpha of the fund? It is nothing but the increased rate beyond the base rate or the average rate that you are getting. To what extent the fund is generating an alpha. So any high alpha means that fund is generating a good fund is generally doing a good job. Similarly, beta also. What is the type of volatility in that particular fund, we will come to know. Similarly, standard deviation, the same that is asking from the average return to what extent it goes, whether the fund is volatile or not, we will know. Similarly, CAGR return, that is average return for a particular this thing. Accordingly, these parameters say, and another important parameter is quartiles. We will say, what is a quartile? Quartile is base 1, 2, 3, 4. Now, for every that is a period, a quartile number is being given in the form of 1, 2, and 3, 4. 1 and 2 represents that the fund is doing very good, giving a better return than the index return or the base return. That means it comes under 1 and 2. Suppose if it is classified under 3 and 4, it is not performing, it is giving lesser return than the base return. So all these important points, that is alpha, beta, standard deviation, CAGR, and ranking, and these quartiles do play a very important role in selection of fund. Based on these very important parameters, now I will be recommending a diversified portfolio. Now what is a diversified portfolio? Again, I am repeating, it is nothing but a combination of investment in all the sectors, that is large cap, mid cap and small cap. Now what is the advantage of investing in a diversified portfolio? It is nothing else. You will have the satisfaction of investing in all the sectors of the economy, in all the performing companies, in all the sectors, any sector you take. So that is the advantage. You need not pick any stock and go to the market and do it. Just by investing in such funds, you can pick up good, you can have the satisfaction of investing in good companies. Now, based on this, I will be recommending 5 funds. Definitely, it will be of great use to you. The first fund is HDFC Large and Mid Cap Fund. Now, what is this HDFC Large and Mid Cap Fund? As I have already told you, the name I have already signifies that it will invest only in large and mid cap, first 250 companies. Now, I will tell you what is the performance of this fund. The return is around 17.81% over a period of 5 years. and the quartile is 1, and it was established in 18/3/1994, and the total assets under management is 5,926.06 crores, and the expense ratio is 2.12. See, the fund was established in 1994, and the asset under management is 5,926.06 crores. So these are the very important points to be seen. So another fund that I will be recommending is Aditya Birla Sun Life Focused Fund. What is focused? They will select 30 stocks from all the given, that is 500 companies. Okay, in large, mid and small cap, and they will invest. Now the performance of this fund is the average return over the last 5 years is 12.69%. The quartile is around 3. Then it was established in 2005, and the asset under management is 5,824.57 crores, and the expense ratio is 1.97. So this is the performance of this fund. Now third fund I am recommending is Canara Robeco FlexiCap Fund. What is FlexiCap Fund? You should understand that the fund manager has got a liberty to invest minimum 65% in any of the sectors, that is large, mid cap and small. So you will have the satisfaction of investing in all the companies. So this is the nature of this fund. Now what is the performance of this fund? The return is around 15.17% over a period of 5 years. Quartile is 1, and it was established in 2003, and the fund and the asset under management is around 7,933.60 crores, and the expense ratio is around 1.88. Now fourth fund I am recommending Kotak Emerging Equity Fund. What is Kotak Emerging Equity Fund? It is purely invested in mid cap, that is 151 to 250 companies. First 100 companies large cap. Here they will invest from 101 companies to 250 companies. So maximum 150 companies they will have in their portfolio. Out of that they will select performing companies. It is purely a mid cap mutual fund. Now what is the performance of this fund? During the last 5 years, 21.17%, and quartile is around 1, and it was established in 3/4/2007, and the asset under the management is around 20,619.1 crores. See the asset under management, 20,619.1 crores, and the expense ratio is around 1.72. Now fifth, that is a fund that I will be recommending is Invesco India Contra Fund. What is Invesco India Contra Fund? Here the peculiar feature of this fund is that they will select those companies where the valuation is very less, but the potential to have a higher valuation is there. So such companies they will select. Now the performance of this fund is 15.31% over the last 5 years, and the quartile is 1, and it was established in 12/4/2007, and the asset under management is around 9,001 crores, and the expenses ratio is around 1.81%. In this way, we have seen how this thing is functioning, and I have given you 5 funds recommendation. If you have got 10,000 rupees, split it between 2,000, 2,000, 2,000, 2,005 funds, and see, and as I have already told you, it is all long term and it's not short term. You will have to fix for 5 years and see the return and enjoy your wealth. Thank you. Once again, you please approach your investment advisors or distributors, and they will also guide you. If that possibility is not there, you can always come to me, Mr.V.Subramanian, 9787552042. Have a nice time. Have a nice day. Thank you very much.